specialized customer would be, we really have two customer types. There is the third-party property managers. So just the pure play, imagine you own a single-family home or a building. You don't want to manage it. It's out of state. You hire a property manager to handle it. We're doing the accounting for many, many companies in that scenario. That's about 40% of our business. About 60% of our business is with owners and operators, meaning you syndicate a deal, you've syndicated 20 deals, you have family money and you own 20 properties, whatever the case is, and you manage it yourself. So meaning you have an in-house property management company. You might not do it all, but you've got, leasing managers and you've got all the property management team. That's about 60% of our business. So that's really kind of our bread and butter, if you will. And that's mainly just because, I'm a real estate investor myself. So that's kind of the background we come from. The accounting is a little more specialized. Now you need a full P&L, full balance sheet. You're sharing financials with owners, your investors regularly. So that accounting is a little more complex, and that's probably our area of specialty. Now, within that kind of 40-60, I will just say, that is kind of owner type. If you look at asset class type, about 80% of our business is residential, about 20% is commercial.
You're listening to the Real Estate Runway podcast powered by Quattro Capital, where we're all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, Tammy, the operational maestro.
Welcome back to another Real Estate Runway podcast. I'm your host today, Tammy Sutton with Quattro Capital. We are going to have a great conversation today with Mark Kappelman, co-founder of REA, a bookkeeping and accounting company specifically designed for the real estate industry. Mark brings 16 years of experience in accounting, operations, and real estate. He previously held a senior finance position at a venture-backed tech company in Chicago and spent 7 years in public accounting at PwC and Ernst & Young. Over the past decade, Mark has acquired over $15 million in real estate across 40 units, gaining hands-on experience in various transactions. He is also an active LP investor in multiple real estate deals. Mark holds undergraduate and graduate degrees from Arizona State University and is a certified financial analyst and a certified public accountant. So listen up, folks, because Mark is bringing us the good stuff today. But before we dive in, if you get any value out of this episode, please like it, forward it, and subscribe to it. We are all about sharing the great information on these podcasts. And now, without further ado, Mark, let's get started. Please tell us a little bit about yourself and what sparked the great idea to form REA.
Yeah, I was a public accountant for 7.5 years, worked at the big four companies, PwC and Ernst & Young. And then, about 11 years ago now, my wife and I started flipping houses. Her idea, I always wanted to get into real estate, but she kind of pushed me over the edge a little bit. And we flipped the house. It worked out. And then we proceeded to buy a couple more. We started building some. Then finally, we bought a 6-unit building and kind of got into commercial, greater than 5 units, did the full BRRRR strategy, refi, asset-based lending. And our mind was kind of blown because we didn't really fully understand that world. So anyways, as that kind of happened, I was still working a W-2 job. And so W-2 job working as an accountant. Now I had left the big fours working at a tech company. But the real estate was really growing. And it was, even though I'm a CPA and my wife actually is a CPA too, ironically. But the thing that always was never getting done was our accounting for the real estate. Even though we're accountants, because we wanted to do deals and buy new deals and underwrite deals and talk to investors and all the kind of fun stuff. And so we outsourced our own accounting because I'm reading all the entrepreneurship books and they say outsource the admin, focus on revenue. And so for me, even though I'm a CPA, it was admin in that business. We outsourced it, came back really bad. We actually did it twice, bad both times, had this realization, just like there's specialized lawyers, specialized doctors, there's also specialized accountants. So then we looked for specialized real estate accountants. Couldn't really find anybody. That was probably like 2017. So kind of had the aha moment of that. Didn't act on it for a couple of years, and then finally in 2019 decided to start a company around accounting and real estate. And so those were my two areas of expertise, and that's really the story.
That is amazing. And I can attest, finding a accountant or a bookkeeper even that understands real estate
Right.
it's like a needle in a haystack.
Exactly. And the softwares are, they're specialized. And when you start talking about closing statements and refis and closing cost credits, you either are met with deer in the headlights by somebody that's got no clue what you're talking about, or an accountant that gets it, and then you kind of just know.
And with you being both a real estate investor and an accountant, you're coming at this with multiple perspectives to address this need for property accounting and real estate industry. So what would you say? Because you said this earlier that the first thing you hear is outsource everything so that you can focus on the business plan and move forward. What would you say to a GP team who is hesitant to hand over that bookkeeping? Because there are some that are like, no, I have to do my books by myself. I have to do my taxes by myself.
Yeah, I mean, I would ask that person, how much do you make per hour? And how much do you make per year divided by the hours? And I would, if that number is more than the cost of outsourcing, and I understand there's a premium to it, but like, it's not as if we don't report to our clients every single month. We do weekly calls with our clients. It's like it's kind of like having an in-house accountant. If you hired it in-house, you would have a one-on-one with this person to say, what are you doing? What are your blockers? What are your focus areas going forward? And so we make it very transparent. And frankly, I would also tell them, how do you know you're doing it right? How do you know that your books are right? Your investors are expecting really great books. Do you even know what you're doing? Some of them do, don't get me wrong, but at some level, you're going to get to a scale just like I did in my small flipping business. I guess I was working a W-2 job, but I just didn't have time to do the accounting. I mean, it's why any company has accountants, because there's a lot of things to do. You let your specialists do their thing, and then you focus on growing the business.
Yeah. I will say, even just owning one property, you're going to find that you're doing books all year long. You're going to find that you're preparing for taxes all year long. And the one thing that comes to mind is Sullivan and Hardy's book, Who Not How, right?
Oh, yeah.
Because investment firms and real estate investors.
I have that on my bookcase, literally one of my favorite all-time books.
Exactly. Because you find yourselves bogged down with hours of trying to get accurate bookkeeping, accurate tax prep. And then when you find that you've made errors, there's even more compounding errors. And oftentimes folks don't realize having that solid bookkeeping system impacts the financial health and growth of the real estate business. So what are the benefits for actually going to REA? What can you provide? What can you say? This is what we can do for you.
Right. So what, like for a typical client, and usually our clients are kind of bigger than just one property. Most of our clients, I would say, have over 100 units. But it doesn't matter if you have 100 units or 1 unit. It's kind of still the same, which is, I always tell people accounting can be hard, right? You go to school, you learn it. And there's a lot of people who have gone to school and learned it. But it gets exponentially harder as time goes and you don't do it. And so it's always like, oh my gosh, I don't remember what that receipt was for. And I was literally just on a call with somebody the other day, and he's like, we're racking our brains about all these random receipts, especially when you're starting to do multiple deals and you've got money, I'm going to say flying all over the place. But when you start paying this architect and putting this deposit down, and it's just like anything. It might be easy in the beginning, but if you don't keep up with accounting, it gets exponentially hard. So we're reconciling the banks every single month. The bills are getting entered timely. Like the bookkeeping is just done and fresh and timely. And usually, our scope of work is bank reconciliation, accounts payable, and financial statement close. And that means closing the books, sending a P&L and a balance sheet to the owner. And then at the end of the year, ultimately, if we're doing the taxes, us handling that, or if they have a third-party CPA, then us sending the financials to that CPA saying, hey, look, here's the books you can use, and even in theory, most of our clients' tax prep fees come down because CPAs love us because we deliver financials that make sense. I mean, on the tax side, the thing they hate the worst doing the taxes is getting a set of books that don't make sense, and now they got to spend hours trying to figure it out themselves. And that's when people's tax fees go up. So, there is some efficiencies on the tax side as well.
Right. And especially if it's a syndication, then you've got investor exhibits and K1s and all that to deal with on top of that. And it can really, it can jack up the price a lot. So what tools does REA use to manage all of the process and ensure that the client's meeting regulatory compliance and audit preparedness?
Yeah, the beauty of us is we use the software that the client has. So, our clients, the biggest softwares they're using are Appfolio, Yardi, Buildium, Entrata, Rent Manager. We don't have our own proprietary software. We use their accounting system. It's their data. Just if they hired an accountant in-house, they would invite that system and set up a user and invite them to their accounting environment. They do that same thing for us. So, we're doing the accounting in their system. Then, of course, we have some internal tools on our side that we use, like ClickUp and Slack and some other tools that help us make us more efficient and do a good job. But we're leveraging their software.
But that's actually really good, because moving it over, that whole migration of information can sometimes be an issue. It can. So
there are some people some of our competitors that have use their own instance, and I understand it's really efficient for us if we had our own software, because we'd have our own chart of accounts and we could work. We could work more effectively, but I think it'd be a much worse experience for the client. The client in this case, if for whatever reason they don't want to work with us anymore, they've got their system, they've got their data. Everybody wants to own their own data.
That's great. So we're talking that REA is for real estate, but do you have a specialized customer, or do you cater to all the fields of real estate?
Yeah, our specialized customer would be, we really have two customer types. There is the third-party property managers. So just the pure play, imagine you own a single family home or a building, you don't want to manage it, it's out of state, you hire a property manager to handle it. We're doing the accounting for many, many companies in that scenario. That's about 40% of our business. About 60% of our business is with owners and operators, meaning you syndicate a deal, you've syndicated 20 deals, you have family money and you own 20 properties, whatever the case is, and you manage it yourself. So meaning you have an in-house property management company. You might not do it all, but you've got, leasing managers and you've got all the property management team. That's about 60% of our business. So that's really kind of our bread and butter, if you will. And that's mainly just because, I'm a real estate investor myself. So that's kind of the background we come from. The accounting is a little more specialized. Now you need a full P&L, full balance sheet. You're sharing financials with owners, your investors regularly. So that accounting is a little more complex, and that's probably our area of specialty. Now, within that kind of 40-60, I will just say, that is kind of owner type. If you look at asset class type, about 80% of our business is residential, about 20% is commercial. So, we're working the gamut of people that own office buildings and own warehouses or just third-party management, and people that own multifamily, people that manage multifamily. Does that make sense?
Yeah, it does. It does. Yeah. So exactly, let me see, how do I want to say this? How can REA actually improve the business's profit margin for someone else?
Well, I mean, look, there's two. The first one is, maybe it's obvious to me, but maybe not obvious to everybody else, which is we're almost always cheaper than an in-house employee. Almost always. Because we use a mix of both our team is international and U.S. based. So kind of that blended cost. If you have somebody working for you in the U.S., I can almost guarantee you it's going to be cheaper to work with So that's step one. Two, though, it's not just, price, but quality. And so a lot of times people are forgetting to charge late fees. A lot of times people are not billing back all the different things that they should be billing back to increase their profit margin. And so you need to have good accounting processes in place, and you got to have people focused on that to get that done. So not only are we likely cheaper on the cost side, but we can actually drive more revenue when it comes to just having processes and making sure that, again, all the billbacks are happening every single month. The leases are accurate. We get hired sometimes. We do lease audits, and they're undercharging their tenants, especially on the commercial side where you've got, multi-year leases and they're a little more complicated. CAM reconciliations in the commercial space. There's a lot of money that can be made and kind of lost in that area. So those are the two big ways.
So it sounds like the common bookkeeping mistakes typical real estate professionals are making. And they often don't realize the impact of those mistakes. So what advice would you have for real estate professionals who are just starting out and they want to get that strong foundation, but they don't maybe quite have the funds to be able to hire you just yet?
Yeah, I would say get an accounting system. Start with QuickBooks. I mean, that's what I started with, and it's very affordable. And have a separate business account. Don't have all the rent and stuff be going in your personal bank account. Open up a business account. Have a business credit card. Run your business through these companies or these cards, right? The bank account and the commercial credit card. That's what I would do. And eventually, if you scale, you'll realize that QuickBooks isn't made for real estate and you need to upgrade to like a building. That is exactly what I did. I operated in QuickBooks forever. And then once we got to like 40 units, it was, you realize that you need to upgrade to a PMS system, property management system. So that would be like my kind of just table stakes advice is getting an accounting system so you can just track all this stuff and do it professionally.
So you mentioned earlier y'all do lease abstraction services. Explain that to me. Yeah, explain that to me. Let's talk a little bit about what all that involves. That's interesting.
Yeah, so that's really on the commercial side. So, when you sign a commercial lease, it's a lot different than a residential lease, which is like term, price, pet rent, parking rent. There's like a few things and it's 1 year lease. Commercial leases might be 5 years with a 3-year option, and the rent goes up by CPI plus 2 every year. Or it might be a retail location where it's like, hey, the rent's going to be a minimum of X, but, we also get a percentage of sales. So there's a lot of complexity that gets written into these leases. And so if you are if you buy a new building subject to leases, existing leases, which they probably will, or if you're a property manager and you take over a building, somebody might just send you a bunch of leases and say, all right, Mark, Adam or Tammy, add them to your system. And it's like, well, you can pay somebody, you can do it yourself, which is totally fine. Or you could pay somebody to kind of go through that lease and pull out all the really key terms, ignore some of the legal jargon, but pull all the key terms, summarize it in a Word document or an Excel document, something really easy to read, and allows you kind of just to be more efficient with your time.
That is so important because having that information quickly and readily available, it also mitigates risk because so many times operators misinterpret or they make errors that lead to legal and compliance issues later. So that's actually really good to have. That's a really good service to have.
Yep. That was kind of the lease audit I was talking about earlier when I was talking about, well, how can we add more value, which is, well, we might, tell you something about your lease that you didn't understand previously.
Yes. Yeah. Is there anything else you want to add today? What if someone new wants to get a hold of you?
Yeah. Look, you go to our website, rea.co. We are a full service accounting company, 100% real estate focused. do everything from basic bookkeeping to filing tax returns to tax, planning and consulting on deals. So, we kind of run the gamut. We just decided we can be an accountant to everybody, or we can just be an accountant to the real estate industry. And we obviously chose the latter, just because we love the space. We own real estate ourselves. It's just, we've identified our area of expertise and really just leaning into that.
And so this is nationwide. You're not specific to a certain area.
Yep. Nationwide. We have clients all over.
That is amazing. Thank you so much for joining us today. This has been great knowledge to share with our listeners. Is there any takeaway you want us to have?
I would just say, it's fine to do your accounting in the beginning, but at some point you got to focus on what you do best and outsource, outsource those business functions to those that do it best. And you'll know when you get to that point.
Great. Thank you for joining us today, Mark.
My pleasure.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com and scroll down for more info. Until next time, this is the Real Estate Runway Podcast.